This is chapter 3 that deals with money management. And notice the word strategy here. So we have financial statements and budgeting. So really strategy to me is really more about budgeting than it is about financial statements. If you remember in corporate finance, we use financial statements to be able to make decisions of where we were doing well, where we were doing poor, and this helped us to kind of measure our progress. And then so budgeting is kind of where we want to go, what we'd like to do, and that's where we set up our strategy. So a lot of this will be kind of review material when it comes to financial statements from accounting and corporate finance. But anyway, so there's your learning objectives. You can read them at the top of your outline. You should have your outline with you. Daily spending and saving decisions are the main element of financial planning. And you may think, well, financial planning is about investments or whatever, but it really gets down to on a daily basis how much money is going out and how much money is being saved, because this is the key thing to, are you going to have enough to be able to have financial independence when you retire. So money management is the day-to-day activities that will help you work towards your long-term financial security. Okay? So there definitely is an element of going out to eat, what you're spending for breakfast, lunch, dinner, that's going to impact your long-term financial situation. So when you think about it, spending for your current living expenses reduces the amount that you can save and invest. So once again, going back to what we're doing every day. And buying on credit, so this is going to be probably a question on your quiz, buying on credit ties up future income. So why is that? Because simply means that what you don't pay for today, you're going to have to pay for in the future. Comparison shopping can save money, but takes valuable time. And now we're going to talk more about comparison shopping later in the semester, so I'm not going to get into it much now. But when it says valuable time, when you're shopping for a candy bar, you're not going to really do much comparison shopping. Hopefully, when you're shopping for a car, when you're shopping for a house, you're going to be spending a lot of time doing comparison shopping. So typically, when you talk about the price of something going up, and then how much time you spend on comparison, it's going to look something like that. At least it should. What I see a lot of people doing is spending, on low ticket items, they might be spending a lot of time up here comparison shopping, and they really shouldn't. So what we're going to focus on here is really how do we store our records, how do we create our financial statements, which is really a review, and then kind of creating a budget. So when it comes to your financial records, you should really try to have some sort of organized system. And to me, this is the number one word for this whole kind of lesson, is to automate. Automate your investments. And I know I don't have anything on your outline for this. You can just write it over the side if you want. And automate your payments. This is just me really talking here. And what I mean by that is, as you all know, that you can set up your phone, your cable, your internet, your electric, your whatever. You can have them automatically come out of your checking account, and you can do the same thing for investments. And that way it doesn't fall behind. It doesn't cause any problems with your credit rating if you don't make a payment because you forgot. And then also your investments are going to be continually funded, even if possibly you don't think you're going to have enough money. You can just have it come out of your checking account or your pay stub, or your payroll, whatever, each month. So that's the big word, is how do you organize it? You automate it. Then you have record of it, digital record of it. So there's a lot of different ways that we can store things. So let's talk about those ways. So things that you could have like in a filing cabinet at your home would be the following. I'm not going to read all these to you. Things that you should put in a safety deposit box are things, you know, like birth and marriage certificates. A lot of you won't probably have many of these things. If you bought a house, maybe your mortgage papers, maybe a list of all your insurance policies, big one, copy of your will. You know, just in case something, you know, if your house burnt down. And notice up here it says safety deposit or fireproof home safe. So, you know, if you have something that can't be stolen easily and would not burn up, then you could easily put all this stuff in there too. Things you can put on your computer, you know, you can scan a lot of documents, or you get them in PDF form anyway. If you have investments, you get them in PDF form. Keep all of those things on your computer. Of course, have it password protected. So this is kind of important. How long should you keep, you know, certain records? Well, your birth certificates, will, Social Security data, you're going to have to keep that really permanently. As long as you own certain investments, you keep them, and keep documents. Real estate, pretty much kind of indefinitely, as long as you own it, really, again. And here's another important one, tax returns. Keep them for about 7 years. I've heard various years on this, but that's the most common is 7 years. I'd go with that. Okay, so personal financial statements. So financial statements, personal versus corporate, you're going to have the same things. You're going to have a balance sheet, you're going to have an income statement, you're going to have a cash flow statement, and they're basically set up for the most part same as a corporation. You just have different accounts. So why do we have personal financial statements? You know, reports our position. How do you know if you're doing well or not? Well, you need to have financial statements. Help you to measure your progress towards your financial goals. And the big reason we have to have an income statement is for the government. The government says how much income did you make, and therefore how much taxes do you provide. So this is the biggest reason why corporations and individuals have to create financial statements, is so that the government knows how much money to collect from them.
Of your financial life.
So I forgot this was coming up. Okay, start over. So I'm going to now show you just a quick video. Hopefully you'll be able to get the sound. If not, you can still watch it. It's not a big deal. It's only like a minute long, and it's about one of my favorite apps, which is Mint.com. Of course, the app is simply Mint, and it's free, and it's a great way to keep track of things, especially if you're using debit and credit cards. You can organize all of your transactions and all of your accounts going into one place. So it's probably the most popular kind of financial app out there. So we'll try this, see if you can hear it. If not, once again, you can read through it.
How do you keep track of your financial life? Statements? Spreadsheets? Scribbles? It's time for something better, something easier, something smarter. Mint is a free, easy way to manage your money that empowers you to take charge of your financial life. Get started with a simple one-time setup. Add your bank, credit card, home loan, and investment accounts. Mint quickly and securely pulls in the information and organizes it for you. That's it. No more bookkeeping. Mint keeps it all up to date. You can see all your accounts in one place, with one login, anywhere, anytime. Mint uses bank-level security and alerts you to any suspicious transactions so you can rest easy. Mint shows you where your money goes. Your expenses are automatically categorized so you can keep track of how much and where you're spending. With one click, you can create a budget based on your spending history, make adjustments, track your progress, and find ways to spend smarter. Mint reviews your financial picture and makes personalized recommendations on ways you can save. You get all the information you need to make smarter decisions and plan for the future. Mint. It's the best free way to manage your money. Sign up and get started with Mint in less than 5 minutes.
All right, so the financial statements would be a balance sheet, which all of you should know. That's where we have our assets, liabilities, and equity. And of course, assets are what you own. This is also called a net worth statement because ultimately you have assets, debt, and then equity. Debt would be the same as, your debt is the same as liabilities. You gotta all know this, being a finance major. Equity is the same as net worth. Okay? So of course, if you had $100 here, $20 here, you would have $80 here. Okay? Simple as that. There is your balance sheet. Liabilities are, of course, what you owe, also referred to as debt. And then net worth is simply assets minus liabilities, as I just mentioned. So when your liabilities are higher than your assets, then it's what we call you're insolvent. And that means you have the inability to pay your debts when they are due. Not a very good situation, and it might cause you to go bankrupt. So then how can we, increase that? So this net worth, we can increase it by, of course, increasing our savings, reducing our spending, increasing the value of your investments, reducing the amounts that you owe. It's pretty simple math to figure out how to increase your net worth. And so there's an example. It's on your sheet there. It's really, really simple math, so I'm not even going to go over it. So the cash flow statement is really similar to the income statement, especially on an individual basis. It's simply how much cash is coming in, how much is going out, and then you either have what we call a surplus or a deficit. You're either bringing in more or less than what you are spending. So we record our income, which could be numerous items here. Could be your income. Then we record our outflows, all of our expenses. And this is where it's really good to have something like Mint to keep track, because a lot of times you don't have any idea where maybe a lot of or how much you're maybe spending on going out to eat, going to movies, drinking, whatever it may be. And then the difference between these two is the net cash flow. Okay, so budgeting is kind of the strategic part, and it's really a spending plan. The main purpose is to help you live within your income. This is like one of the top things to remember when it comes to money management is living within your means, because a lot of people don't. They end up spending more than what they bring in. Okay? And of course everybody says, well, yeah, I should spend my money wisely. We all know that. But once again, the whole point of a budget is to try to kind of keep you on track, to hold you accountable, to make sure that you are spending your money wisely, therefore you can reach your financial goals and also be able to deal with emergencies. So this is a chart. I know it's not necessarily on your handout there, kind of the different phases that you would go through when creating a budget, kind of assess where you are, figure out your direction, implement your budget, evaluate your budget. How are you doing? Okay? You should be always evaluating. So there they are, the steps. Set your financial goals, budget an emergency fund. This is a big thing. You'll hear me talk about this a lot during this semester. It's one of the first things we should all be doing when it comes to kind of setting us up to be financially in a good position, and that first thing we should think about is setting up an emergency fund, not along with, of course, paying off our credit cards and so on. But this is one of the top like 3 things you should be doing with your money, is making sure this happens. And this is going to be we'll talk more about it later, but this is going to be 3 to 6 months living expenses. Okay, so like a minimum of 3 months. So in case you lose your job or something happens, got to fix your car, you should have at least 3 months of expenses. Then of course we have budget, recording. Once again, this is where a thing like, or an app like Mint can help you with that, and it also can make it easy to look at the reports and review what's going on. And then if something's out of whack, then revise your budget. And these are the same things that corporations go through, nonprofits go through every year, and a lot of times they do them every month, every quarter. So of course, common sense, budget work only if you follow it. That's why it's important to automate, because when you don't automate, you often will not follow it. So automate means it's gonna make it that much easier to follow it. Okay? So when it comes to types of budgeting, there's all kinds of ways. So I didn't put these in red here, but we have a mental budget, which I wouldn't recommend this one, but especially right now in college, it's probably okay. But when you get out there and you got a lot of different expenses coming and going and money coming in, it's hard to keep all of that in your head. Physical budget is fine. A lot of people use what they call envelopes, meaning they put, when they get their money from their salary, they'll cash it and they'll put whatever, $20 in an envelope, and they'll write on the front of it that this is for movies for the month or whatever. And when the money's gone out of that envelope for that month, then you can't do that anymore. Okay? So some people, that works great. Others, that's really annoying. A written budget is simply like you write it in a notebook and you keep track of it. That's kind of like what Mint does, but you just do it the old-fashioned way. You can have a computerized budgeting system, using Excel, that you all should know fairly well, or even definitely a system that's really meant for budgeting for businesses is Quicken. I wouldn't think you would need to do anything that elaborate for your personal budget. Excel should be fine. There are online budgeting websites, and my favorite would be probably something like a budgeting app, because all of you have your phone in your hand most of the time, like myself, and you can easily check it to make sure that you're on track and whatever. It's just having everything tied into an app just makes it a lot easier. So we need to think about, what are your savings goals? So I mentioned earlier, a big goal to save for is an emergency fund. Once again, 3 to 6 months of expenses. And then you can read all these other ones there on your sheet, all kinds of different savings goals. So when I have you do your own financial plan, you're going to have to be thinking of items like this. I want you to give me some goals that you have that you would like to be saving for. The U.S. ranks poorly among other nations when it comes to savings rates. So here's a chart going all the way back to the 60s, and this is the personal savings rate for Americans. And you see we're back here, 10%. There's a really high place here, 14% in 1970. It's even higher than that. Sorry, that's 17%. Then in the 2000s, all the way down to 2%. This is when COVID hit right here. I'm not sure how this happened. It's right here. No one spent anything, and went up to temporarily up to 33%. Kind of an anomaly there, very short term. But anyway, we're right now at around 13%. which is much higher, as you can see, than the average. I'm not sure what the average is for this period, probably more like around 6%. But anyway, when we compare us to the rest of the world, here's just, no, this is 2016 numbers. But we have United States at about 5%, Canada 4%, a lot of Europe higher than we are. But anyway, if you go down here, you can kind of see some of the highest rates, and there are some other countries with even much higher than this. But of the developed countries, there's some pretty high rates. I'm not sure how Denmark is minus 4%. That's pretty bad. It basically means you're living off your credit card. You're spending more than what you're bringing in, and the United States was close to that at one time. So you see lowest savings rates, and we're down there. We're down there. So anyway, so methods to make savings easier. Write a check each payday as a percentage of income and deposit into savings. I would say don't even write a check. I would say just, once again, automate and have like a mutual fund automatically take money out of your checking account after, whenever you get paid. If your employer has a 401k, then have money come right out of your paycheck and go right into the stock market. One of my favorite apps is Acorns. Not that I have a lot of money with Acorns. I think about $3,000 now, because I started recommending this to students maybe 3 or 4 years ago. And I think in my 3,000 is simply from this, and I'll give you another example of Acorns later in the semester, but it rounds off all of your credit or debit card purchases to the nearest dollar and invest that amount. So if you buy Starbucks for $2.80, takes 20 cents and invest it in the stock market. And then you can always add to it. I think I put in an extra $5 a month. And here's what I was talking about earlier, is a payroll deduction is one of my favorite ways to have things, automatically done. And this last slide, I know it's not on your outline, but it just shows you to achieve your financial objectives, convert your savings goals into specific amounts. So for example, you say you want to save for a down payment to purchase a home. So your saving method is you're going to put $200 every 3 months into an account, getting 4%. Now, these interest rates are very high from what you could get right now at the bank. So right now at the bank, you might be getting 1 or 2, but if you put in the stock market, you might be getting more like 8%. So anyway, just you then get a sense of how much money you're going to have in the future. You're going to use future value to calculate these. Hopefully you remember how to do that from chapter 1. So these are all your goals. These are goals you should all be thinking about writing down right now, figuring out what is the method you're going to use to save for them. What kind of rate do you think you can get on wherever you're putting your money? And then how much are you going to have after a certain period of time? So this is for retirement, so you're going to be looking at 30 years. This is for purchasing a home, which probably most of you are not going to purchase a home until you're probably about 10 years from now. That's kind of the median time that people buy a home. And that is it for chapter 3.